Let's jump right into this explainer, where we're unpacking the reality of a nation rapidly positioning itself as a strategic foothold in the European Union. We are talking about Latvia. Often overshadowed by its neighbors, Latvia is quietly building a powerhouse economy. They're attracting massive tech investments and offering absolutely incredible incentives for founders. But at the exact same time, they're wrestling with the immense, real-world logistical hurdles of some massive mega infrastructure projects. Okay, let's dive into this.
Here's our roadmap for today. We're going to cover the Baltic business boom, forming a company, and the golden visa pathway. Then we'll get into green energy and tech, followed by the mega project challenges, and finally wrap up by answering the question, is Latvia your next move?
Section 1. The Baltic Business Boom.
Just think about the sheer speed of Latvia's digital climb right now. In the IMD World Digital Competitiveness Ranking, they jumped from 40th place in 2023 to 38th in 2024, and they're projected to hit 31st by 2025. That is their highest score ever. The environment there is incredibly open for innovation. Over 90% of public services are now available digitally. They are seriously stripping away the red tape from modern businesses.
And all that digital efficiency translates directly into hard capital, $26 billion. That massive number represents Latvia's foreign direct investment stock in 2024. To put that kind of growth into perspective, their active investment projects ballooned from 4 billion euros to roughly 11 billion euros in just one single year. That's a massive influx of foreign capital targeting banking, real estate, technical services, and manufacturing.
Section 2. Forming a Latvian company.
So, if you're a founder looking to establish a case in the EU, how does Latvia actually stack up against its neighbors? Well, Estonia is famous for its fully remote e-residency and 0% tax on retained earnings. Lithuania, on the other hand, is the undisputed king of fintech and EMI licensing, but they do charge a standard 16% corporate tax. And this brilliantly illustrates where Latvia fits in, right in the middle. It offers the exact same 0% deferred tax model as Estonia, meaning you pay absolutely nothing in corporate tax while profits stay reinvested in the company. But it serves as a slightly lower cost base. It's really the optimal cost-sensitive option for holding and trading companies within the EU single market.
But wait, Latvia sweetens the deal even further. They've established 5 special economic zones, which include 2 free ports, offering some highly aggressive tax incentives. We're talking about up to 80% corporate income tax rebates and an incredibly low 0.3% effective property tax rate for enterprises operating there. And the absolute best part? These rebates are locked in until 2035. Plus, if you're bringing in a major project of 10 million euros or more, the state has a fast-tracked coordination council ready to offer direct support.
Section 3. The golden visa pathway.
If you're looking for an entry point, the most accessible route is investing in a local business. For a minimum investment of 50,000 euros into the share capital of a qualifying Latvian company, plus a one-time 10,000 euro government fee, you can secure an annually renewable residency visa. This gives you the right to live and work in Latvia, include your spouse and dependents, and crucially, travel visa-free throughout the entire Shenzhen area.
Now, if real estate is more your speed, the minimum investment jumps to 250,000 euros in one or more local properties. You'll also need to factor in a one-time state tax of 5% of the property's value. Alternatively, you could put that same 250,000 euros into 5-year non-interest-bearing government bonds, alongside a 38,000 euro state fee.
Another highly attractive route is the bank deposit option. This one requires a minimum investment of 280,000 euros in a 5-year fixed deposit account, plus a 25,000 euro government fee. What's super fascinating here is that qualifying banks are currently offering fixed deposit rates of up to 8% per annum. So this isn't just a residency play. It's potentially a solid financial yield locked in for 5 whole years. So where does this all ultimately lead? Here is the exact timeline. You start off with a temporary visa in year 1. By year 5, you're eligible for permanent residency, provided you've actually lived in Latvia for at least 8 months a year during the previous 4 years. Fast forward to year 10 of full-time residence, and you can officially apply for citizenship. But keep in mind, naturalization requires genuine integration. You've got to pass an A2-level Latvian language test, a history test, and even demonstrate knowledge of the national anthem. So, you might want to start practicing your sinning right now.
Section 4. Green energy and tech. There is a massive, fundamental shift happening in how Latvia powers itself.
Current projections show that by May 2026, solar power is expected to surpass hydropower for the first time ever. Solar would account for 43% of total output, generating 235 gigawatt hours, while hydro would sit at 41.7%. Thanks to this incredible renewable boom, domestic generation is on track to cover an impressive 94.5% of the country's total electricity consumption. That is just a huge leap forward for their energy independence. In this robust green grid, it's acting like a magnet for tech giants. We are seeing massive global players establish their Baltic footholds right in Riga. Microsoft recently signed a memorandum of understanding to build an AI hub, while India's Tech Mahindra is opening a Baltic hub that's bringing 500 new jobs. It's not just software either. Use-Infocom, a massive biometrics player from Uzbekistan, set up its European headquarters here, and global biotechnology company Biogen established a direct neuroscience base. The tech sector there is absolutely surging right now.
Section 5. Rail Baltica's Mega Project Challenges.
So, we've seen the soaring economic growth. But what happens when a small country takes on a generational infrastructure project? It really begs this pivotal question. Can Latvia's infrastructure actually keep up with its massive ambitions? Let's transition to the immense, grounded logistical hurdles of the Rail Baltica project, which aims to integrate the Baltic states into the standard 1435mm European rail network.
Here is the stark financial reality. The cost estimate for Rail Baltica in Latvia has skyrocketed from an initial 2 billion euros to a staggering 9.5 billion euros. For the entire Baltic region, the project estimate ballooned from under 6 billion to nearly 24 billion euros. This is a monumental financial strain for a nation managing a GDP of roughly 40 billion.
So, the crucial point is how these numbers impact the actual day-to-day rollout. Right now, there is a 3 billion euro funding shortfall just for Phase 1 in Latvia. Because of this, there's a very high risk of completely missing the 2030 completion deadline. To cope, the Ministry of Transport is proposing a strategic re-evaluation. That includes a shift to a single-track line instead of a double track just to save money. There's even talk of temporarily using the old Soviet-era broad-gauge tracks to connect Riga Central Station to the airport. Experts are warning this might prevent European high-speed trains from actually entering the capital city initially. It's just a highly complex puzzle of budget constraints and cascading delays.
Section 6. Is Latvia your next move?
Let's weigh it all out. On one hand, you have incredible opportunities, a 0% retained corporate tax, highly accessible golden visas starting at 50,000 euros, historic green energy milestones, and booming foreign direct investment. It really is a founder's dream environment. But on the other hand, you have the reality. A 9.5 billion euro rail project fraught with delays, significant infrastructure funding gaps, and the ever-present geopolitical proximity to Russia, which of course necessitates high defense spending. It's a true balancing act between incredible economic potential and some very real growing pains. So, I'll leave you with this question to ponder. Is the Baltic boom the strategic foothold your business needs to conquer the EU market, or are the infrastructure hurdles and geopolitical realities too steep a price? Thank you for joining me to explore the data on this explainer, and I hope this helps you make your next strategic move.